Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 30th, 2025, and we're diving into Gilead Sciences' latest earnings report for the third quarter of 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Gilead Sciences has released some interesting numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Gilead Sciences reported a total revenue of $7.8 billion for the third quarter of 2025, which is a 3% increase compared to the same period last year. John, can you elaborate on the factors driving this growth?
Absolutely. The increase in total revenue was primarily driven by a $400 million rise in royalty, contract, and other revenues. However, product sales saw a slight decline of 2% to $7.3 billion, mainly due to lower sales of Biktarvy and cell therapy products. On the profitability side, Gilead's non-GAAP EPS came in at $2.47, beating the analyst's forecast of $2.15, which is a positive indicator of their financial health.
That's impressive. And I see they generated $4.1 billion in operating cash flow. How does this position them financially?
Generating such strong cash flow allows Gilead to maintain a robust financial position, enabling them to invest in R&D, pay dividends, and repurchase shares, which they did to the tune of $435 million this quarter.
Product sales breakdown. Let's delve into the product sales. HIV product sales increased by 4% to $5.3 billion, with Biktarvy leading the charge. What are the key drivers here, John?
Biktarvy sales rose by 6% to $3.7 billion, driven by higher demand and favorable inventory dynamics, despite a lower average realized price. This highlights the strong market position of their HIV portfolio. On the other hand, Veklury sales plummeted by 60% to $277 million due to reduced COVID-19 hospitalizations, and cell therapy sales faced competitive pressures, decreasing by 11% to $432 million.
It seems like a mixed bag for Gilead's product lines. How do you see this affecting their strategy moving forward?
Gilead will likely continue to focus on their strong performers like Biktarvy while addressing the challenges in their cell therapy segment. Their strategic investments in R&D and new product launches will be crucial in maintaining growth.
Operational efficiencies and future outlook. Operationally, Gilead seems to be managing their expenses well. R&D expenses decreased to $1.3 billion, and SG&A expenses remained flat at $1.4 billion. What does this tell us about their operational efficiency?
Gilead's ability to control costs while investing in R&D is a testament to their operational efficiency. The decrease in R&D expenses is primarily due to lower study-related and clinical manufacturing expenses. Their effective tax rate of 16.2% also reflects a more stable financial environment compared to last year's negative rate.
Looking ahead, what can investors expect from Gilead?
Gilead has a promising outlook with multiple potential product launches in 2026 and a strong clinical pipeline. Their guidance for the full year remains optimistic, with expected product sales between $28.4 billion and $28.7 billion, excluding Veklury. This positions them well for continued growth.
CEO's vision and strategic initiatives. Daniel O'Day, Gilead's CEO, mentioned the company's robust portfolio and strategic initiatives. Can you share more about his vision for Gilead?
Daniel O'Day emphasized the strong start for Yeztugo and the growing uptake of Biktarvy, Descovy, and Livdelzi. He highlighted the positive data for Trodelvy in metastatic triple-negative breast cancer and the potential for multiple product launches in 2026. With no major loss of exclusivity expected until 2036, Gilead is well-positioned to drive positive impact for patients and sustain business growth.
It sounds like Gilead is on a solid path. How do these initiatives align with their long-term goals?
These initiatives align perfectly with Gilead's long-term goals of advancing innovative medicines and maintaining a strong market presence. Their focus on expanding their clinical pipeline and strategic partnerships will be key to achieving these objectives.
Key takeaways. In summary, Gilead Sciences has delivered a strong performance this quarter with a revenue of $7.8 billion and an adjusted EPS of $2.47, surpassing analyst expectations. Their strategic focus on high-demand products and operational efficiencies has paid off. John, any final thoughts on Gilead as an investment prospect?
Gilead remains a compelling investment with its strong financials, promising pipeline, and strategic initiatives. Investors should keep an eye on their upcoming product launches and market dynamics in the cell therapy segment.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Gilead's performance in the comments below. Until next time.